We know about this bond deal?
Well, we know it's a lot of debt, and we know the rates are going to be pretty attractive for the company. So obviously the high yield market and the investment grade market both have been relatively robust this year. So between where rates are overall in terms of the Treasury market and what they're looking at for spreads over those rates, it's going to be pretty attractive financing. We'll see where the talk comes. Right now, it looks like we maybe have a little bit of a concession in the front end. I would expect a fair amount of that to go away as this goes through the pricing process. But in the back end, that's very attractive for 30 and 40-year paper. To your reference point, 145 to 160 over for that longer dated stuff. It's pretty compelling.
So Noel, can you put this in a broader historic context? Because I've had some people in credit tell me that, for example, high yield is at record low spreads. How does this fit into a larger historic context in terms of what the spread is for this kind of money going out?
Well, so I think, talking about the broader market, right? I mean, we're not at historic lows. I mean, you got to take out that sort of 2005 to 2006 period where things got super compressed. But we're pretty low historically speaking, particularly when you look at the leverage that's in the corporate marketplace these days. So spread per turn of leverage, which in the corporate vernacular is something that we look at, is near historical lows. Relative to Amazon itself, I mean, 160 for a company that's in a very dynamic industry for 40-year paper. You don't see a lot of really extended pieces unless somebody comes in and asks for it. That's pretty darn tight.